All right, guys. Good afternoon, everybody. Welcome to the sixth week. All right, this is week 6 of our 12 weeks of mentorship with Adetola Freeman. So basically, what we're going to be doing here today is I'm going to be sharing with you another simple approach. All right, to trading. Or another approach that you could adapt as a trading strategy for yourself. All right, then once we're done with that, I'm going to go over again and show you an alternative to it. All right, when it comes to making use of the IPPS, the IPPS approach. So we're just going to wait for a few more minutes so that a couple more people join us. Sumba, my friend, you're welcome. You're welcome. You're welcome. Today is Tuesday, 15th of October, 2024. Let's just wait for a couple more people to join in. All right, once they do, we're going to kickstart this particular session. Oh, you're welcome. You're welcome. You're welcome. Apologies. There were classes I'm supposed to have had this week, but it's crazy. We've not been able to have such sessions because, to be honest, the generator in the office, our power plant is bad. And I think if you're a Nigerian, you already understand that currently the power grid is bad, is damaged. All right. And I think they're working on fixing that. So we've not had power supply in the office for a couple of days. So that's why some of my personal sessions are still lagging behind. But nonetheless, we're going to see we have the engineers working around the clock to fix it as quickly as possible. Having said that, all right, I think we have about 6 people on the call now, so we can start. All right, so today I'm going to be sharing with you a kind of scalping approach. All right, it's quite similar to scalping. All right, but you could also use it for other trading, other trading styles. So the first thing you want to do now, note that the strategies that I share during this 12 weeks mentorship are not necessarily strategies that I personally use on a day-to-day basis. All right, they're just some of the strategies that I have been privileged to learn over the years. All right, some I paid to learn, some I learned from YouTube, and some others I had to create myself. Okay, so this particular one, I created this particular system myself. You're going to have to put in the work in order to discover for yourself whether it's as accurate as I think it is or not. All right, but so far I've experimented with this a couple of times and I think it's pretty accurate. All right, so you want to go to the 1 hour time frame. It could be gold, it could be Euro USD, GBP USD, whatever commodity you're more familiar with. All right, so you want to go on that particular commodity on the 1 hour time frame. I want to set up the trading, the moving average. All right. You want to use the moving average. This is the setting that we're using on the moving average. All right. You can see length is 75, source is close. Method is simple moving average, length 50 for the smoothing. All right. Then you enable the smoothing line. All right. And that's all. You would have these two moving average lines on your chart right away. All right. Please let me know if you guys are following me. I want to be sure that I'm carrying you guys along every step of the way. All right, you want me to brighten up the background? All right, let's see if we can do that quickly. I use a dark background because of my eyes. Sometimes I like to work without my glasses, so. Let's see. Hold on, I'm trying to sort this. All right. Hold on, I'm coming. Let me kind of make this a bit darker. I hope that works. Okay, I think that would be it. Can you see it better now? Good afternoon, Mr. Fatai Adewumi. Sumba, can you see the screen better now? Mr. Oyedi Kachi Nathaniel, you're welcome. All right, beautiful. All right, so here we have, you know, the moving average. You've already installed the moving average. The next thing you want to do is add a stochastic indicator. All right, but the settings of the stochastics, this is what you're going to use for the settings on the stochastics. All right, length 30, smoothing 30, case smoothing, then de-smoothing, you're using 12. But the time frame, all right, the time frame is really important. You want to use 5 minutes. All right, 5 minutes. And then, okay. All right, so what do we want to do? So generally, this blue is the 75 moving average, and then you have the golden line, which is the smoothing, all right, it's the 50 period smoothing line of your 75 period moving average. Okay, now why that's interesting or why that's important is that when the blue line is above the gold line, we are in a bullish trend, all right, we have a bullish trend. So what do we do? All right, so here we can see that it's at the bullish trend is about to start. All right, the bullish trend is about to start. So we're going to play it forward slightly. All right, we'll play it forward slightly so you guys can see how this works. Now, remember, since the moving averages are bullish, all right, we're looking for opportunities for a buy. All right, but under what conditions are we going to be buying? Hold on. Under what conditions are we going to be buying? The answer is simple. We are going to be buying when the stochastics is oversold. All right, so let's keep playing it forward. All right, so now what we do here, all right, let me show you. Let me see. Let me mark that region first so you guys can see it. The stochastics is a bit messed up because it's a replay. All right, but let me show you what it would look like on the regular market scenarios. All right, so you see that here we can see the stochastics came below the level 30. All right, which means it became oversold. And that happened around this other block, all right, this demand zone. So what do you see that happened next? Immediately after that, price went higher, all right? And then you see that again, it became oversold again, all right? And then you mark another demand zone and then you buy from. Since the overall trend is bullish, you're simply looking for a confirmation from the stochastics that the trend is, that the trend is exhausted, all right? The current power holders in the market, you want to be sure that they are currently exhausted, all right? And then you would seize that opportunity, all right? You take that entry. Then you see that we are still in that uptrend, all right? The stochastics is oversold again, all right? Slightly oversold. This is a demand zone, all right, right here. I think I need to change the color of this thing so it becomes a bit more visible. Hold on, let me make this thicker. All right. So this is our demand zone. All right, we take a buy from there, and you can see price went higher. Then again, you can see the stochastics is oversold. All right, we have our demand zone here. Now note, I am not just drawing those zones randomly. Here, the break of structure here was caused by the candle, this red candle, because it swept liquidity from the candle before it. All right, and that's why this qualifies as another block. I used just the week because the week is actually quite long, and this is the 1 hour time frame. All right, then if you come here, you see that we got another break of structure again. All right, with the momentum originating from down here. And you see that when price got back there, it reacted. All right. And then you see the moving averages later switched bearish. All right, it switched bearish here. And while it was bearish, you can see that the stochastics became overbought. All right. When it became overbought, where is our supply zone? Right here. All right, that supply zone is our entry. Why? Because you see that there was a break below this low. All right, break below this low, and all of that was originated from this candle, because the last candle that swept liquidity at that high was this black candle. All right, was that black candle. Are you guys with me, please? Please let me know if you guys are with me. I need to be sure that you guys are with me. Mr. Murakinyo, I can assure you that it's going to be an experience you won't recover from. All right, so please, if you're here, drop an emoji. All right, and while you're dropping an emoji, also please just like the stream. All right, just click on the like button, just like the stream. All right, I don't know what it does, but the team said I should tell you to like the stream. The media team said I should ask you to like it, so please don't mind me. I don't know why they said that, but I think it has to do with the algorithm or something. All right, so let's go back to the chart. So we had our sell here. then you'll notice that here the moving averages have crossed bullish again. All right, they've crossed bullish again. Now, when they crossed bullish, what do we have? You see that here the stochastics is also oversold. All right, meaning we're looking for a demand zone to buy from. And I think that that would be this red candle. All right, this particular red candle. All right, because if you do a breakdown of the market structure, when price broke below this low, all right, this became the new low, and then it broke that low again. And then we broke this new low again. All right, making this the new major low. All right, and this would be the new major high. All right, so you see that the momentum that broke above this high, all right, came from this red candle because it swept liquidity from the candle before it. All right, and it was followed by a high impulse move. All right, so this will be your entry for a buy. Remember, what I'm showing you right here is a scalping system. All right, it's not a swing trading system that you're going to be open for, 1:200, 1:20, 1:30. All right, it's a simple scalping system. And I sincerely do not expect anybody to do anything else with it. All right, I do not expect that anybody would do anything else with it. All right, are we good? All right, beautiful. Let's go on. So breaking down the market structure a bit further, all right, just for fun, you see that this supply zone was still quite active. All right, price reacted from this as well. But watch what happened. The moving averages became bearish. All right, became bearish. This was our stochastics becoming overbought. This was the last break of structure, which meant that we have a supply zone somewhere before that break of structure. And typically I would want to use this week. Yep, that week. All right, and you see that we got a quite an entry, albeit a scalp, all right, but it was still quite a good entry. And then you see the moving averages switched bullish again, and at that point we have the stochastics being oversold. Then what do we look for? We look for a demand zone, all right, or another block, which is this. And what do you see? Price goes bullish. All right, price goes bullish. I would have added in things like I'd have added things like divergence, convergence, and all of those other stuff. But I don't want to complicate this more than it adds to be. All right, so just focus on the position of the moving averages and then the stochastics indicator. And trust me, you already have a solid scalping strategy on your hands. All right, you already have a what? A solid scalping strategy on your hands. So let's move on, guys. Here we had kind of a divergence, all right, but I wouldn't be showing you that. And then again, we see stochastics getting oversold here, all right, at this point. With this red candle being the supply zone. All right, this small red candle being the supply zone that price reacted from. And what do you see? Price goes kaboom. All right. Then again, we see this is stochastics being oversold again. All right. And all we need to check for is our demand zone that price might want to react from. All right. Although price, first of all, reacted from this inside bar. All right. Price, first of all, reacted from that inside bar. But that's just it. When price returned to the major demand zone, all right, which gave us the break above this eye, you see that we got a reaction. Then the moving averages became bearish again. All right, and while bearish, we can see the stochastics is overbought here. All right, where's our supply zone? Right over here. All right, and then what happens? Price drops. All right, then we got the stochastics overbought again. All right, with this being our new supply, our new area of supply, that black candle. All right, and price drops. Then again, we see the stochastics overbought again. All right, still using the same supply zone so far. All right, until this became a break of structure. All right, and at the point where structure was broken, you see that price simply came over to use this as the supply zone. Stochastics became overbought again. All right, and then price reacted again from the supply zone. All right, such that if you follow this, you realize that the losses are extremely minimal, all right, because you don't get to incur so many losses, all right, and that would tell you that this was a very good buy on gold. All right, talking about our scalping positions, this would have been a good buy on gold. Do you guys see that? And I just exited my trade once the stochastics was overbought again, literally. So let me know, does this make sense to you guys? Do you get it? And if you do, just name one commodity you would like to see me use this strategy on. Just name one commodity you would like me, you'd like to see me address based on this approach. All right, we'll do Euro USD, but I need to know that you guys are clear on what I've shown so far. Does the strategy make sense to you? Is this something you can, you already understand how to apply? I need to be sure that this is something you guys can work with. Please let me know. All right. All right, so let's do Euro USD. So right now you see that this is pointing bearish. All right, this is pointing very clearly bearish on Euro USD. So what are we waiting for on Euro USD? We want to see this become overbought. All right, and I think I can mark down this as my supply zone. I can mark that down as my supply zone. Possibly option 1, and then probably this as option 2. All right. So this one gave us the break below this low. This one gave us the break below this low. All right. You can see that this particular one, the supply zone here has already been invalidated. So what are we waiting for? We want to see price get to one of these two supply zones and the stochastics being overbought. All right. What can I do? I can simply set an alert. All right, and say, no, I can. Nah, TradingView allows me to add an alert. Let me see. Nah, I'm unable to add an alert to this. What a pity. All right, but basically that's it. You want to see the stochastics get overbought. All right, once it does, you know that all is clear and you can take your shot. This particular scenario on Euro USD, actually price used the fair value gap, not the demand zone. Let me show you. All right, can you see? So price decided to use the fair value gap, not the supply zone at the top of that gap. All right, but if you check all that has gone, all that has happened in the past, you see, okay, we're bullish based on the moving averages. This is a demand zone. All right, stochastics is oversold. What do we get? A buy. All right, when an uptrend, stochastics is oversold. All right, and then price gets to our inside bar. Then what happens? A buy. All right, even when it got to this demand zone, this tiny demand zone. All right, you see that there was a reaction, even though that was not oversold yet. But see what happened when it got completely oversold and came into the demand zone from this break of structure. All right, which is this red candle. You see that price went bullish. All right, and it just keeps happening like that. We have a demand zone here. All right, we have a demand zone here. Stochastics gets oversold, and you see the bullish run. All right, here again, you can see the moving averages are still bullish. Here again, the stochastics is oversold. We have our other block here. All right. This black candle, and you see that price reacted nicely. Again, stochastics oversold. You see that there was a buy from this this demand zone. All right. So, and it just goes on and on and on and on like that. All right, it just goes on and on and on and on like that. This sell entry right here, all right, you would have easily been able to capture that entry from that other block. All right. So right now, the next entry we're waiting for is when the stochastics gets overbought. Is Euro USD clear now? I'm only going to do G card next. All right. We've already done Euro USD, so we'll just do G card next. All right. And then I will show you the IPPS approach to this, which is an alternative. Remember, this is more of a scalping kind of approach. All right. So when we're done with this scalping approach, we'll go over to check what the IPPS template looks like for those trades. And what you realize generally is that there's a possibility of you, adapting the IPPS templates to whatever other strategy you currently use. How do you know the change of trend? You use the moving averages. I've said that already. The moving averages show you what the trend is. All right, the 75 with the smoothing. So if the moving average is above the smoothing, you are in an uptrend. If the smoothing is above the moving average, you are in a downtrend. It's as simple as that. So let's do GBP card. Now, looking at this GBP card chart, what kind of trend? What is the trend? How would you describe the trend? Very good. It's an uptrend. It's an uptrend. So, what do you notice? This was the first time in that uptrend that the stochastics became oversold. And what did we get? Our first entry. All right, buy entry. This was the second time the stochastics became oversold. And what did we get again? Another buy entry. So what are we waiting for now? We're simply waiting to see when next this stochastics is going to get oversold. All right. And we want to be able to squeeze in a buy. Do you get it? This was a sell trade on G-Card. All right, and it was taken from this supply zone. Bearish trend from the moving averages, stochastics overbought, and then you see doom. So let me make a quick correction to the settings on your stochastics. All right. You guys can use this because if you use the one on the 5 minutes, it's going to lag a little bit and you're going to have to keep refreshing your chart. All right, so instead of that, you can just use this setting that is on the screen right now. All right, use your 1433 and use the current time frame. All right, ensure that this is ticked. All right, ensure that this is ticked. And I think that's pretty much it. So that's GBP card. We're expecting a buy. All right, do you guys get it? Yes, Nathaniel. 1 hour is the best strategy. Is the best time frame for this strategy. Can you use other? Can you use other time frames? Of course, yes. But to be honest, 1 hour is your best bet. Always mark, especially since you're working on the 1 hour time frame, your week matters. All right, your weeks matter a lot, because what you're seeing as a week on the 1 hour time frame consists of several candles on the 5 minutes. Who else is there? Any other questions? Any other questions so that we can go over to the IPPS approach? Same commodities, by the way. So let's start with Euro USD 1 hour time frame. Now, what the first thing you'd observe is that for the IPPS approach, all right, you don't get to see trading signals so frequently, all right, unlike what you have with the scalping structure I just showed you. The 1 hour time frame, using the IPPS template, all right, you would be taking longer trades, all right. So you're typically not scalping, you are taking trades that you can get to hold for longer. Let me show you an example of such trades. For example, this particular sell trade, you'll be holding it up until somewhere around here, and that is already about 190 pips, all right. Then you get to see this other one, all right. You take your trade from here, you're closing somewhere around here, that's about 20 pips, all right. That's about 20 pips. Then you check and see that this kind of a buy entry right here now, this kind of a buy trade right here, you would have held the trade for about 65 pips, followed by another trade of about 70 pips, all right. So this gives much longer trades, all right. That's Euro USD, by the way. Let's see GBP card. Awesome. So this is GBP card using the IPPS template. All right, and you see that we have the sell here. All right, we have the sell here. That's about 250 pips on that sell. Okay, 250 pips on that sell. Then we get several buy confirmations. All right, the first around here, the second around here, the third here. All right, can you see? So you would have had opportunities to buy all along this route. All right, then there's also here the market was bearish. You'd have sold for about 65 pips. Here, let me see, was this a confirmed no? Here you would have bought for about 205 pips. All right, so that's how the IPPS template works. It gives you better trade opportunities. All right, and at the same time, you're also able to know when the market is in a flat trend. All right, you're able to know when the market is in a flat trend, so that you're able to position yourself appropriately in that market. All right, you're able to position yourself appropriately in that market, and it's as simple as this. All right, that's all that the IPPS the IPPS template is about. All right, it gives you signals, and at the same time, those signals come with alerts. All right, I can choose to enable the alerts, disable the alerts, however. So I can switch on the alerts here, switch on the alert messages, switch on the emails. All right, turn on the sound. All right, so I can do all of that from right within this console. All right, so that's the unique thing or the beautiful thing about the IPPS template. All right, it takes away the guesswork, takes away the stress, so that you're literally trading, almost hands-free. All right, you're almost trading hands-free as though you have a robot. All right, but the sweet thing about this one is that you are responsible for your risk. All right, you're totally in control. All right, as compared to when you're trading with a robot, where the robot can decide what trades to take and how to take them. In the case of the IPPS template, you control your risk, all right, and you decide for yourself how much risk you're willing to take, or whether or not you're even willing to take the trades at all. All right, so it's as simple as that. And as you guys know, the IPPS template is currently available on the Telegram group, completely free of charge to download, to test out, and then give your feedback and your recommendations. All right, so far we have about 15 quality reviews about it already, of people who are saying, oh, this is working for me, I'm enjoying this. All right, but I need a couple more. All right, I need to have at least about 50 more reviews. All right, and I need you guys to assist me with it. All right. So please, if you've not downloaded it yet, or if you've not started testing it out yet, I would recommend that you do. All right, please do that for my sake, because it's a product that we really are serious and intentional about, and we need you guys to help us make it work. All right, we need you guys to help us make it work. So please, download it on the Telegram group. It's completely free of charge, no strings attached. All right, we just need your reviews, okay? So with that said, I want to say thank you to you guys for joining. I think we've come to the end of today's stream. Don't forget the strategy we've talked about. I've shown you guys a very simple scalping strategy that I think can fetch you guys, some real good substance. All right, so work with that, and then let me know how it goes, okay? Are we good? Let me read your comments in the chat box before I sign out, guys. Let me have your comments. Let me have your comments before I say goodbye. If you don't have any comments, anything to say, just drop an emoji. All right, let me know that you guys are listening and you've gotten this far with me. All right, beautiful. Thank you so much, guys, for the comments. I'm going to be signing out here. Thank you so much for spending this last about 40-something minutes with me. All right, I love you guys so much. And I'm always eager and excited to bring you guys value on search stream sessions. All right. So till next week, Tuesday, when we get together again, I wish you guys a very profitable trading week. God bless you guys and have a fantastic rest of the week. Goodbye and take care.